What is up, traders? Hope everybody's doing well. Today's lecture is going to be about BPRs, or balanced price range, what they are, how they form, how we can spot them, and how we can use them in our trading. So, what is a BPR? First of all, if we look to the left, the white up close candles, if we notice, we can see a nice fair value gap, right? From here to here. Beautiful. So this is a normal fair value gap, nothing new. We know what fair value gaps are. Now what happens when we have on the opposite side directly another opposite direction fair value gap? So in the noted one right here, the bullish fair value gap is a BISI, buy side imbalance, sell side inefficiency. What happens if we have a SIPI, a sell side imbalance, buy side inefficiency happen right after it? Now we have another, let's add a wick here, by the way. Sorry, my drawings are not the best, but you get the point. Now we have this sell side imbalance, buy side inefficiency. Let me put that in red. Oh no, different color. Let's put that in this color, whatever. Right. This right here is a sell side imbalance, buy side inefficiency. On the right, we have a buy side imbalance, sell side inefficiency. On the left, we have a sell side imbalance, buy side inefficiency. So a BPR is when you have two overlapping fair value gaps, and the BPR is the portion that is overlapped. So in this case, the BPR, if you extend this one to the right, this one to the left, what is the region of these two fair value gaps that overlap? It's the one in the green, right? So the BPR becomes this region. So if we bring back the other one and then add text. So the BPR becomes this shaded greenish color, right? Now that doesn't mean that we don't have a fair value gap, the bigger fair value gap, this one, but it means that the balanced price range is the shaded area. And what this means, a BPR is a very sensitive area that, let's say for example, we're looking to enter short here. This would be a very, very nice zone to enter shorts off of, right? Or to see price react off of, right? That doesn't mean that you put your entry here. It's just that having BPRs is a very sensitive area. And I'm going to show you guys in a bit how price, a lot of the times, spikes into them and then reacts heavily off, right? You have one shot up, one shot down, a balanced price range. Price will want to reprice to it, and then it will react heavy if we're in the correct direction. Like for example, we're bearish in this scenario, for example. If we're bearish and we're correct, then if I'm looking to enter off of a value gap, then sure, you would want to enter off of here and not be too greedy, but having a BPR as a extra line of defense or an extra confluence, if you see price respecting this PDRA and dropping, that just tells you that you have a very nice bearish market because it's respecting that BPR, right? I'm going to show you guys live examples right here on the 4-hour chart. We have a nice BPR that formed that was respected multiple times. So if we look, we have from here to here, this is a fair value gap, right? Normal fair value gap up until here. And then if you extend that through, you have a BPR. Where is that BPR? It's in this fair value gap right here, if I'm not mistaken. So if you extend that, and you extend this like so, it's about this. Now that is a BPR, correct? The shaded area is the BPR. I'm going to note that. BPR, and put it in a whitish color. Oh no, let me put it in a different color, a bluish color, right? So the BPR is the area that is included in both fair value gaps. So the BPR, if we take this normal fair value gap off, is this blue shaded area. That's the BPR, which is basically this portion of this fair value gap, extend that through, and this fair value gap because it overlaps with it. And you can see here, if we zoom in, how price very handsomely, this is a 4-hour chart, so you would have had a nice setup. how price taps into it here, rejects heavy, and then later on continues this BPR, breaks through it here, and look at how this area is very sensitive and how price reacted to it here, and then when it broke it, this is another BPR. This is a fair value gap, but then the BPR portion of it is this area, right? Because it overlaps with here and then all the way back here. So this still is the BPR out of this fair value gap, this fair value gap, and the other fair value gap behind. So now look at how price reacted to it here. Look at this, very nicely, right? So that's basically a BPR where you have overlapping of fair value gaps, and then the overlapping of these two fair value gaps, you take them, you plot them on the chart, and it's a very, very nice zone that is very sensitive for price, and you can find nice entries off of them. I'm going to go on to the 1 minute chart and show you guys another example on this. So onto the 1 minute chart, we can see here how price pushes up, creates this fair value gap. You want to include the volume imbalance, right? Extend that through, you have this big sell side imbalance, buy side inefficiency. The area that is overlapping the both is just this area. Extend that, and you can see how this 1 minute BPR is respected very nicely by these candles. So let's assume that you're looking to enter short, and you're looking for the best entry, or an entry to, or something to kind of validate your entry. You'd have had something like this above structure, and then the rest is history, right? So that's going to be the lessons on BPR. There's definitely going to be a homework assigned with this lesson. Please be sure to do it. If you have any questions, shoot them. And yeah, hope you guys found this insightful. And until next time, stay safe and happy trading.